Well, while we're setting up, thanks everybody for coming. Much appreciated. My name is Kai Hoffman. I'm the CEO of Oren Inc. We are a data analysis company, and I'm just going to stop there for a second to let the slides catch up with me. But it looks like it's been a busy day so far, and I know you do have a choice of presentations and workshops to attend today, and I appreciate your time and listening to what I have to say today. I chose a provocative title here because I think it's quite fitting. No money, no news, no gains, all pain in 2018, and how companies and investors can escape the death spiral that comes along with it. Now is the time to go to the washroom. I've got 2 more minutes of intros, and some of you have seen I'm seeing some familiar faces in here. I'm going to do a quick intro, who we are. Some of you know us. I'm going to go look back at 2018, a year to forget, and then give you some pointers on how to escape the death spiral as a company and an investor. I hope you get something, or there's something in there for you to take away. Real quick, up-to-date numbers, we're actually tracking 1,352 companies based on TSX and CSE numbers. You can actually read the numbers quite well. It's not too bad, especially the one in the bottom left corner. I was worried about the slides following. We locked over 34,500 deals so far. We're close to 35,000 deals, over 1.5 million data points. We collect 46 data points per financing that we put in our database. Our criteria, and this is really important to keep in mind moving forward, the rest of the presentation will have that as a context. We track the junior mining market, including oil and gas, market capitalization, companies below $1.5 billion in market cap, and financing sizes below $100 million. We do not track debt financings. The Oren Index, that's what sets us apart, that's what makes us unique. Everybody can look at press releases and put them in a database, but we've created the Oren Index that sort of shows you how the industry is doing on a weekly basis in terms of financings, broker activity, and a total number of deals opened. You can see the January 10th data. That's been actually the lowest point ever since we've recorded data. It's also been the shortest week, obviously, so far of the year, and our index score of 9 has been the lowest data point. And the weeks in the years before have had this roughly the same score. Coming out of a week 2018. Okay, this looks horrible on the slide. This is the website. I just took a screenshot of it. It looks better on my computer screen for some reason. But what's really important that I haven't pointed out in particular in the past is the hold period that we track. So you can go to the website and you'll see companies that have less than a week before their hold comes off. So some of investors, in this market, there's not much to do. Maybe you shorter stock. Not telling you should. Just quickly, something we're proud of. We worked together with PDAC, and we're coming out with an updated report very soon for the next conference. As you've noticed, I skipped through the intro rather quickly. Come by booth 1211, I'll give you more details. 2018, a year to forget in the mining sector. We had some very strong headwinds, and I'm going to go to those, or talk about those in a second, but what I mentioned earlier, January 10th, 2019, the index score hit its lowest point ever. It's a bunch of factors, obviously seasonality, beginning of the year, first week, nobody's there. When you can see 15 and 14, the same has happened, but the overall trend in 18 was just dismal. Strong headwinds, I mentioned that. I actually found a really good press release by the CSE that provided us with some numbers, because I had a hard time finding an overview of financings in the cannabis space. So the CSE, sort of an indicator, obviously is a bit different animal than the Toronto Venture Exchange, but you can see that what we've been up to, or up against here. We've seen 270 transactions in the cannabis space. What's important is the $3.99 billion that's been raised out of the 5.22 in general on the CSE. We've seen financings in excess of $520 million. And just look at the mining side, only $217 million raised, according to the CSE, on the CSE side for mining. So that gives you a good comparison where the action was in 2018. And another quote I'm going to close with in a second here as well is that the CEO of the CSE actually sees the cannabis space saturated in terms of financings, and that's the Canadian cannabis space. So that's going to be one of my key takeaways here in a second as well. So no commissions were able, brokers had no chance to make any commissions in 2018 here in mining. We've seen the broker activity drastically decrease. The number of bought deals and brokered deals, bought in orange, brokered deals in purple, have dramatically declined since 2017. There was no activity in the markets, only 100 brokered deals and 47 bought deals in total. The cold hard truth, obviously, the number of deals in the mining sector has dramatically decreased. We've seen a decrease of 32% and a total of 40% actually in the total dollar volume. One thing that has me slightly optimistic because it doesn't look as grim is this number, and that's the average deal size. I hope you can read it. We're down to $2.9 million. It was way worse in 2013 and 2015, so that's something that keeps me kind of optimistic, meaning that we've seen lower or smaller and fewer financings, sub $1 million or the $100,000 keeping the lights on financings. Flow-through has been a lifesaver for the Canadian industry, and we've looked at the number of common versus flow-through financings. And as you can see, in 15 or in 16, the percentage roughly was 10% of the overall financings. In 17, it already jumped up to 15.5%, and in 2018, it actually saved our bacon in the industry. It was 18.7%. Escaping the death spiral. How do you do that? Some advice for companies, investors, and what do we see? As you've noticed, I've rushed through the 2018 numbers. We have way more data back at our booth. I could have put on 100 slides talking about 18, but one of the points I want to make is here, how can you escape this death spiral and what's going to change in 2019? So the example of a death spiral, or a death spiral stock, and it's tough to be in a situation when you're management of one of these companies. You probably know that you're in trouble, but it's hard to get out of it. The company back in March did a very nice financing at 35%. They thought everything was great, but they didn't raise enough money. And the stock, they couldn't provide enough drill results, and the stock started to decline. Another nail in the coffin was the repricing of warrants from 135 to 20 cents. And then there was a no news promo, but the stock kept declining. Company had a couple things going against them, obviously. Commodity as one, it was a copper company, and with the US trade wars, that just was completely out of favor. The management team was overburdened. They weren't just working for this company, but they had 3 different jobs, and I just couldn't focus on it enough, because I'm of the opinion that more corporate development in terms of trying to get a joint venture or strategic partner in could have easily saved this company. And on top of that, I drew a nice chart. I went to the CEDAR filings and looked at the cash situation of that company, and it just was rapidly declining. The market knew the company needed to raise more money. There was no news coming out of it, and the company is now sitting at like $200,000 in the bank, and it's pretty much dead at this point. One thing, and I've highlighted that in green, is actually the capital structure is still great. They're sitting roughly at 60 million shares out, so way less than 100 million. So a rollback is not necessarily imminent, but of course dilution will be coming to save this company. That's just an example, and I purposely cropped the name out, so I'm not here to bash anybody. This is just an example. Just one thing we focus on as well, and I think that's also a great indicator, and something that helps you point out where we're headed, and it's sort of the sign of desperation as well, is how many full warrants and half warrants are being issued. This is just a look at 2018, and 56%, or 363 companies, or financings came with a warrant. That's roughly, or the warrant premium actually is 56%, and the average warrant term 27.7. Of course, you can read the numbers yourself, but it's important to point that out. And the next slide actually draws a very nice picture here, and that's the warrant trends, because companies do have to peacock. They have to increase either the amount of warrants, meaning a full warrant instead of a half warrant, or have to juice it up by giving a warrant at all. One thing I've noticed by a couple of companies that I follow personally in this sector, that they are trying to raise right now money without a warrant. And if they can get that done, I think Fireweed Zinc has just done that, or is just about in the process of doing that. And if we see more companies doing that, I think that's a very strong sign that at least these companies have a chance, and the investors are still there, and I believe that a warrant might actually be holding companies back. One thing we haven't done, and I wish I could have done that for this presentation actually, is take a look at the companies that haven't had warrants issued ever, versus, I've got a slide coming up in a second, but it's not as detailed because I don't have the final numbers. The percentage-wise, the difference of full warrant, half warrant versus no warrant issues. Here is, for example, a great example, but I don't have the overall numbers, but it paints a very clear picture, and something investors should be quite aware of is the issue of warrant overhang versus no warrant overhang, or warrants outstanding. Again, I cropped the names, the companies on the left and the right. They should be well known. If you look them up, you'll find them. But the company on the left has 82 million warrants outstanding, 36 million of those at 10 cents. A good thing for the investor is that you could actually take a very close look at this company come June, July, because that's when the warrants expire, and hopefully that red bar, the top one, might get a nice lift up because that ceiling might be removed at that point. But you can see it's trading in a range, and whenever there's a bit of a breakout, warrants are being exercised, and the stock's just being punished again. On the other hand, you have another company quite successful that doesn't have a warrant overhang. If the stock wants to run, it can run. And if the circumstances change, obviously it'll come back, but there's no ceiling on the stock. And that stock has come from 70 cents. It's moved all the way to $3.30 without any. If you look back further than a year, it has a nice chance to run. So obviously investors do want to participate twice, ideally in the upside, but if it gets out of hand, it can work against you. So how to escape the death spiral? Obviously there's some points on there that should be fairly obvious, and I made a couple already. Strong backing by a financial group. I've seen a bunch of groups out here at the conference that are worth following because they have been able to raise money, significant amounts of money. The market is willing to give them more, and in a market, I'm hoping that we don't see a continuation of 2018, but the first few months we'll probably do that. And if you're willing to or looking to invest right now, following companies that can raise money in this market would be my go-to at this point, in combination with a flow-through financing, or if they have Canadian assets, if the markets stay dire, or we even see, let's just hope the gold price doesn't break down, stay with Canadian assets. We've shown you 18.7% of the overall financings was flow-through, and that saved our bacon in 2018 and made sure that companies actually were able to still produce results. I mentioned joint venture, a strategic partner. Are they willing to commit? Are they staying pro rata? That's something investors should look at. Management, obviously, that should actually be number one. But I've heard it so often in the last 3 years that I just put it on the slide anywhere because it's an important factor anyway. But make sure management is not overburdened. I showed you the examples. Like I really like the team at the other company. They're good guys, but they just didn't have the time to do what was necessary. Find a joint venture or a strategic partner. Capital structure, obviously it speaks to the warrants again. I made that example, but also balance sheet. I brought a very nice example of a company here, and the way I found it is actually I usually read the Stockwatch press releases, and when somebody starts to exchange shares for debt, that's a signal. So that's how I found this nice balance sheet. So they have $213,000 in the bank, but look at the total liabilities, $20 million. How much do they have to raise? Most of it is actually outstanding to a company that is owned or related to a director. So be careful, take a look at that. Outlook, trends, what are we seeing? I mentioned a couple things. Flow-through will still be a major factor. I had the opportunity to speak with Sean Rusin last November in Zurich during a conference. He's going to raise a ton of flow-through if he can to drill, because it allows him to do that. Flow-through should be readily available to him as well. He's been the most successful, or that his group has been the most successful in raising flow-through. I think they raised close to $110 million last year. He has access to it. He sees the pipeline of flow-through financings or flow-through money being available. And because of the very strong cannabis sector, many investors are sitting on a nice pile of cash, and with flow-through, they can actually reduce their tax burden, so I've been told. The quote I was relating to earlier by the president and CEO of the CSE, the Canadian side of the business, it's capitalized at this point. Yes, the US is still catching up, but that is actually has me somewhat positive that the mining space might move back into the limelight as the investors are looking to reinvest some of that money they made in the cannabis and crypto space. So look out for that. If a change tide comes, I've actually used that analogy that we're seeing a very fragile flower trying to blossom right now, and as soon as somebody steps on it, of course, we'll have problems again. But it's really trying to grow, and the market is trying to grow and develop, but it's not being let right now. But it's going the right direction. I think there's somewhat of a positive buzz here. It's not overly optimistic, which makes me optimistic. So, and as I mentioned earlier, if we do see less financings with warrants attached, that'll show you that the market is actually getting healthier. And I would love to see that, because it takes away some of that overhang and just shows that you don't have to be giving away the house and kids for financing, and not being able to be, or to be in a position not to be bossed around by some of the bigger financing groups perhaps, is a nice show of strength, and that has me very optimistic. Some housekeeping. One thing we do, and we're going to focus on more in 2019 because we see the market coming back, is the Mining Deal Club. I run that together with a group of very well-known characters here in the industry. Our goal is to provide investors of the opportunities we see with access to high-quality pre-vetted opportunities. Our goal is to have quality, integrity, independence. You will not see us promote a 4-month placement and telling you you'll get 100% after those 4 months, after the hold comes off. We don't get finder's fee or backdoor deals. That's really important because our names is untouched. You'll see who I'm working with here. I was able to get a couple really good guys on board that are helping me vetting deals. There are consultants to our group. It's Brent Cook, Tim Oliver, and Paul Harris, and myself, obviously. But they've lent their names to this. They allow me to use their name for this. We started the Mining Deal Club at the end of 2017, and so far we've proposed 6 financings to our group, or our subscribers. So we're not a chop shop. We see roughly 1,000 deals, as I've shown you earlier, a year, and we've proposed 6. And I think that's a pretty good number. I got 2 minutes left, but because we're so data-centric, I'd ask you to come back to our booth 1211. I'd be happy to answer all the questions there, as I have our database with us. If there's anything you need to know, you want to look up. Appreciate the attention. As I said, I remember you do have a choice. There are 4 other workshops going on simultaneously. And please stop by or shoot me an email. Be happy to answer any questions. Thank you.